Hi, welcome to the Market Alert for Friday, the 5th of August 2016. So yesterday, as forecast, predicted, expected, the UK interest rate was cut to 0.25% from 0.5 or 0.5%. Historic low for interest rates, and also we see that Carney is put in another 100 billion of taxpayers' money, and also 10 billion of that is for the purchase of corporate bonds, which is a first here as well. So 10 billion for corporate debt bonds is also available as well. And a video that I'm just in the process of researching, putting together, it's trying to get all of the bits and pieces together to tell the story of this over the last 8 years, is coming together, and it's going to be entitled, I think at this point, Willful Ignorance by Central Bankers, because this is just financial suicide going forward for the banks. I'm not a fan of the banks at all. They're corrupt to the core. They always have been, and no doubt will continue to be as well. And again, I will explain my reasons and justifications for saying that when I actually release the video. That said, they still have to make a business on a basic level, lend out depositors' money to those who wish to borrow and make the margin in between. And of course, this is being squeezed with these low rates, and going forward, of course, that's going to make it worse for the banks, which is, it's like creating this problem, massive problem for the banks, which have already, got problems as it is, and now just being compounded by rate cuts and then zero rates and then negative rates. So very, very strange approach to actually dealing with this. And again, it's all predicated really on everything is too big to fail anymore. Nothing is allowed to fail. In the no more capitalist society, there's no allowing for fair value or for anything to fail. That's what used to happen. If it failed, the rubbish was cleared out of the system, and then everything was cleansed and everything moved forward. But no more. Everything, including 10 billion now made available for corporate debt, just to keep the illusion going that everything's fine. And this started in 2008, and it continues. It's beyond the twilight zone. It really is. But anyway, more of that in the video. Hopefully, I will make good strides today and able to get most of it put together. Say it's a bit of a monster one, but it's important to see the pathway to why we're seeing this lunacy now. And as I say, the willful ignorance of Yellen, Carney, Draghi and Kuroda at this time, and why, again, it's going to fail, and it's going to fail miserably on a massive scale because of what they're actually doing. But anyway, let's move on. So yesterday we had the reaction of Carney's decision. We see the market, they're moving up 50 points, and only 50 points as well. One, because it was expected, and two, rate cuts from 2008 to 2011 and probably just a bit beyond saw massive moves in the Dow. It was great news for stocks, because as the rate drops in the banks, it's there's more speculation in the market. You're going to get a better return with a bit more risk. Well, there was no risk actually because of the QE money, and now we're seeing the sort of the junkie, alcoholic sort of response, I suppose. When you first take drugs or drink or whatever, you get a rapid effect, and then the more you take, the more you need to get the same effect. And 0.25% now produces 50-point move in the Dow, and that's what we saw. So we had a sell signal initially. After this, no surprise really, and then the market moving low. It drove through to the we'll just draw that one in there. We've got the 18,350 level there, the market coming through and then reversing and finding support and moving back to the upside. Very similar picture to what we had on Thursday when the market became quiet. We then had an 18-point loss on this one, and then we saw the market moving lower again in the evening session, with this one failing too, as you'll see there, with a 24-point loss as the market came back. But you could have got out of this before by mitigating the loss as the market came towards the close. You didn't have to sit and wait for it to come through. It's very frustrating when you see this, because you have a good run on the first trade, and as I said before, if you make profits in the first trade, you may wish to stand aside, in particular that the implied volatility is so low at this time as well. In the daily chart, you've got the market sideways again, which we've seen for some time. We had this sideways move. It dropped off a little, but now we're back in this sideways range. And even yesterday's range is a very narrow bar as well. So again, Friday, let's see what news we've got to move the markets. Is there anything after 3 p.m. or at 3 p.m? There's absolutely nothing, so the market's going to be left to its own devices unless there's something of a geopolitical nature. This market is going to trade sideways again. Nothing we can do about it. We're at the mercy of what it's actually doing at the moment, and we're also going into the holiday period as well. Schools broken up, a lot of people leaving for their summer holes as well, so you've got to keep that in mind, and things generally then get back to normal in September. But saying that, 2008, all of the big sell-off and collapse in the markets took place in August, so who knows what could happen. And certainly the implied volatility is indicating that there is something big coming, because we're at 1033 at the moment. We were at 978 last week, and when we get in these lows, we know we get a reaction from the underlying market, and that is precisely what we are going to see going forward. Just on Deutsche Bank, keep this one in mind, because this could be the black swan event that brings down the whole system. In particular, the interest rates are being cut constantly, and negative rates as well. Yesterday, the low for yesterday, that's the 52-week low of 1120. That's been down to 1106. I don't know why that's saying that, because we had 1106 on Wednesday, and then prices are rallying a bit. But you can see from the chart there, even the Deutsche Bank reaction, market higher and then continuing to trade back to where the actual weakness was, filling the gap, which is not unusual. Watch this bank. It's teetering on the edge financially, and again, like I say, just watch it a bit more closely, because if we get below the 10 euros per share, then the excitement will really kick off with this, bearing in mind that if you look at the maximum height on this, it's 120 euros per share, and we're now at 1140, so you can see how much has come off this since 2008, and just getting worse, and we're back below the lows of 2008 now as well. Right, that's it for today. I will see you in Monday's edition. As ever, thanks for watching. See you in the next one.